Good day everyone, how are you all doing? This is Yix here at Magnet Crypto, back again with another video. In this video we're going to be looking at Bitcoin's price action and using the Fibonacci tool, one of my favorite tools because of the concept behind it as well. So without further ado, let's get straight into it. So I started this video off with a very important quote. It's actually used quite a lot in trading and investing, and that's because it's so accurate and so true. History often doesn't repeat itself exactly, but it does rhyme. It's all in the nuances. So we're not going to see like-for-like action from the past, but often you can use the past to paint a clear picture of what we're going to see in the future. So with that in mind, let's get straight into the charts and looking at the important questions of this correction, what to expect going forward. So I'm only going to focus on Bitcoin today because Bitcoin is still the leader of the market. Although Ethereum has caught up quite a bit, it's still the driver of the market. If Bitcoin is not going up or is not doing well, then the rest of the market will also go down. That's how it is. So let's look at Bitcoin's price action today. So I've drawn a Fibonacci tool. You can see from the bottom over here, it's much clearer with the line chart, the clear trough and peak. And normally when you have a clear bottom and a clear top, the Fibonacci tool is very accurate in predicting that it's going to hit at least the 50% level and potentially the 618 or the 786. If you don't know about the Fibonacci, it's a pattern that we see in the universe, in nature. Some people call it, like God's formula. It's how the universe, how many things are formed. Even when you look at, for example, when the egg is fertilized, the human egg or any kind of egg starts to multiply, 2, 4, 8, 6, etc. When you look at the pattern, and when you add the last two numbers together to create the next number, it starts to go up in a certain way. And this is the Fibonacci sequence. I probably butchered that explanation, but essentially it's a pattern that consists in nature. You see in like spiral formations. Let me get a picture of it quickly and then we can continue on with this video. So let's get the proper explanation. Fibonacci numbers, commonly denoted as F, form a sequence called a Fibonacci sequence, such that each number is the sum of the two preceding ones, starting from 0 and 1. Now let's look at some images in society. So it forms this spiral. You can see from the smallest number, it starts to form a spiral and expands, and it's found in nature quite a lot, and even a lot of the early architects would use that sequence in their buildings formation. So you can see in nature you have this spiral formation, you have it in this shells, even in this whatever this is. Even as the higher up you go, when you zoom out of nature and when you look at a planetary, interplanetary level, you see the Fibonacci sequence in the universe and galaxies. So if you look at this, for example, this is a Fibonacci sequence, which is insane, but there you go, it's in nature. It's a very important sequence, and thus you can also find it in the charts as well. So I've drawn, it's most effective when you have a clear bottom and a clear top, like a clear bottom and a clear top. Now the only bottom we've really had in the last few months is this bottom over here. A small bottom over here, but this is the main one as it had more volume, and quite clear top over here. So we've almost hit the 50% level. What I expect is potentially to hit the 618 and potentially much less likely to hit the 786 level. But let's go back into historical data. As I said with the opening, mentioning in the opening quote, history does not repeat, but it rhymes. So let's look at historical data, and to better understand whether we'll reverse from this level, 28,000, or we're going to go down to 25, 26, or even as low as 22.5. So I was doing quite a bit of looking into the past to better predict what's going to happen going forward. So we're in a very similar time frame as 2016, 2017, as we are right now, 2021, potentially into 2022, probably into 2022. So let's go a bit further down. So we can say we're about in this area right now. That's where we are in the current time frame. So we can look at the bottom over here. We're going to start using the Fibonacci tool to see how far down the corrections went in the prior cycle. So let's look at this bottom over here, quite clearly the bottom up until this top that it formed. So you can see, using this bottom, that we retraced up until the 618. Also, it almost hit the 50% level, very similar to what happened just now. We almost hit the 50% level, just shy of it, but then it continued to go down and spiked or wicked all the way down to the 618 level before reversing and completing the extension, the 0.27 extension, just shy of that, and then going on to the 618 and the 786 extension. So first and foremost, we hit the 618, but we also hit the 50% and we hit the 618. So we can kind of use this going forward in that potentially we could hit, we've already almost hit the 50% level, but potentially we could go further and hit the 618 level. It did not hit the 786 level in this instance. Moving on. So now we have another situation of a clear bottom and a top. Let's see what the Fibonacci reveals with this. Now in this instance, we're using the bottom of the candle and the top of the candle. It pierced through the 786 3 times before continuing going higher. Sometimes we can use the wicks for the Fibonacci sequence as the bottom and the top. Let's see if we get any clearer. In this instance, you can see that we have not touched the 786 here, but it did perfectly close on the 786 level, and it almost touched the 786. However, in both instances, it got close to the 786. In this instance, we spiked way past the 786, or significantly past the 786, and it closed below the 618. So in this instance, both of the two lower levels were hit. However, it did not touch the bottom. It did not go that far. And the other thing to note is that we had candle closures only around the 618 level. Let's move on. Now this was a huge move from around March until June. Massive move, but a clear bottom and a clear top. That's what we're going to go by. So in this instance, we closed below the 50% level and tapped the 618 level perfectly, but it did not go any further than that. So on 2 occasions, we hit the 50% and then the 618. In the middle, the second occasion, we hit the 618 and the 786 and spiked below that, give or take. As I said, bear in mind, history does not repeat itself, but it does rhyme. Now, again, we have a clear bottom and a clear top. Now, again, this is the third time, or the third or second time, where we've had the 50% level met, exceeded, and just shy of the 618. 786 has not been touched once again, but these two levels are very common in getting tapped. So again, bear in mind I'm using the clear bottoms and the clear tops for each move and each sequence of Fibonacci. Again, a clear bottom and a clear top. What are we going to find with this one? We hit the 50% level, but did not go any further. And the biggest move, which was at the end of 2017, starting going into 2018. Now, of course, with hindsight, we can say this was the peak, but we would not have known this going into this rally. We hit the 50% level and then tapped the 618 initially, but then we started to close below it. We started to hit the 618 again and the 786. And then this is the big move where we actually closed below the 786, which is the first time that it happened. If you recall, I'll show you the other example again. The first time that we closed below the 786, this is when alarm bells should start going off. Of course, the other thing as well, price had already gone down by 15,000, about 75%. So that's another clear sign that the peak is probably over. But to confirm with the Fibonacci, the clear close of the 786, and as well with the candle closure, the retrace did not go further than the 618 before going further. So if you did not get out, at this point somewhere along this line, then the fact that it was not able to get past 618 would be your your last chance probably. So let's go back quickly to the only other time where the 786 was properly tapped. I think it was at this point. It was not. No, it was here. So if we just use the candles instead of the wicks, as we did that with all the other ones, you can see here that we closed below the 618, obviously below the 50%, and we tapped the 786 on a number of occasions, but we did not close below it. It reversed from this level quite quickly before continuing on. And this occurred in about three weeks is how long it took for the bottom to be in, and then we start to reverse. So bear that in mind, that it took about from the top end of February, 3 weeks, 4 weeks, and then it was about a month to 2 months before we were back above the previous high. And that's the key part as well going forward. The fact that we obviously corrected. Another thing to just take a note of is the correction was 34%. We corrected, but then the thing that we're looking out for to understand, to confirm that we're back on the bull run is the candle closure above the previous high, and that's the key part. You can see here that it went way back down again. So we corrected, we made another peak, massive wick. Yeah, obviously we can see in hindsight that it continued on, but bear in mind that this is the shakeout. This is to make you believe that this rally is over, take your money out, sell, get out as soon as possible. That's what this move was about. But then it continued on. But the main part is to confirm it closed above it. So you would have missed some gains, but this would have been the confirmation that we're back on the ascendancy. Now going forward into where we are today, this is why I'm using the Fibonacci tool, because it is very accurate in predicting where the levels are going to be, where we could possibly turn around. So as we saw in the historical price data, most times we hit the 50% and the 618. This is going to be less likely that we hit the 786, but not impossible, because you did see that it did hit it and even exceeded the 786. So we could potentially go as low as the 20,000 level around here. This is as far as I would imagine it to go. But on the more common occasion, we hit the 50% and we tapped the 618 level. So in terms of price targets, then if we use this at the bottom, we've already hit that 50% level, but the next target would be 25,800 or 26,000, and then potentially 22,000 lower, potentially to 21. But the most likely case is that we tap the 618 at about 26 to 26,000. And then the targets above that, once we close above 38,000, which is the previous top. The extensions will take us to at least 54,000, 43 as a conservative target. But you can see during the bull run, we absolutely smashed targets. So I would say 54,000 and beyond is where I predict it to go. Now, in terms of the targets, now I did say these are the targets I've got personally, but we also saw that it has tapped the 50% before and continued on going higher from this level going forward. So it doesn't mean that we're definitely going to tap that 618 and potentially lower. So in terms of waiting for those levels to be met and then putting in your buys, personally, I'm not waiting for that, because as I've just shown you, we have tapped the 50% level and then reversed straight from there, going back on. So if you're waiting for those other levels to be hit and they don't hit, you're going to miss out on Bitcoin being on sale. Personally, I'm averaging my buys in real time right now because of the possibility that we might tap the 50% and turn around straight away from this point. It's very possible. So to try and predict and time the exact bottoms, as always, it's going to fail. It's just, probability, you're not going to get it right. So for me, it's about averaging in the buys at the moment while everyone is kind of waiting on the sidelines. For me, that's the best strategy. So that'll be all for this video. Hope you got some value from that and how accurate the Fibonacci can be, especially during these bull runs, in predicting the levels as to which we're going to correct to. As always, what I'm doing, it's not financial advice. This is what's working for me. I'm averaging in more buys during these times instead of during the rallies when everyone is jumping on. And I'm not trying to predict the absolute lowest point, because it's just too difficult to do that. So I hope you got some value from that, and see you in the next video. Peace.